Good evening, everyone. I'm Leah Noonan. I'm Associate Director of Alumni Relations at Mercy College, and welcome to Home Buying 101 in partnership with Mercy College Alumni Relations and My Money Workshop. We're so delighted to present this informative session for you tonight. We wanted to remind you that we are recording this virtual event. We will be continuously monitoring the Q&A, so please feel free to enter your questions and they will be monitored, and we'll try to get to everybody's questions. So it's going to be a fast-paced and informative night. Please, make sure if you have a question that's burning, make sure you enter it. Welcome to this event. Let's get started. A recording will be available after and will be emailed to you. I'm going to start with bios for our presenters, starting with Lonnie Rodriguez. He has over 19 years of experience in the financial services industry. Lonnie is currently a client relationship manager with Nationwide Retirement Plans. He provides ongoing strategic support to his clients and delivers education to employees of companies in different industries about the importance of saving for their retirement and other financial wellness topics. And then we have Lenora Walding, who learned at a young age the value of savings and investing, making her passionate about financial education. She believes successful understanding and implementation of finances is vital to financial freedom and personal independence. Lenora holds a BS in electrical engineering and computer science, as well as a concentration in MBA in finance with a concentration in personal finance. Sorry about that. I screwed that up a little bit. And last but not least, we have Veronica Ferrero. Veronica is presenting for Immigrant Mortgage. She is has been in the mortgage business, retail, wholesale, and commercial industry for 25 years. And we are so lucky to welcome them all tonight because we've got a real panel of experts. Thank you so much, everyone.
Leah, thank you so much. Thank you for welcoming us and inviting us here. Lonnie and I are here on behalf of My Money Workshop. And like you said, Veronica is joining us from Immigrant Bank. And we are thrilled to be presenting to you guys and trying to help you guys understand how to take some of the stress out of home buying. The one thing that we'll start with, and we always start with this just so that we can get it out there, is My Money Workshop is a nonprofit organization. Our mission is to educate people to help them manage their finances wisely and to make a lifetime of informed decisions. We're not here to tell you what to do. We're here to educate you. So our advice is not intended to be, it's not intended to be advice with respect to your personal finances. Let's start with the next slide. When do you plan to buy a home? I know everybody on this call is interested in home buying, so I don't know if you just want to quickly throw it in the chat box just so we have an idea. What's your time frame? Is it a year, 2 years, 5 years? The reason that we ask is just so that we know when we're discussing some of the important things for home buying, which categories you need to start with, what your timing needs to be to move forward with your home buying. I see 4 years, 1 year, and the next 6 months, a year, 2 years. So pretty much in less than 5 years. So the most important thing to start with is, how do we get started? I think this evening we're going to go through a bunch of different things to help you get prepared and give you steps to follow to get to your first home. I know Veronica's going to go through a 10-step plan on how to plan for buying your home, but quickly, Lonnie and I just want to go through step number 1. Take the time to be prepared. Set yourself a goal. Understand how much you need to save in a year for your down payment, for your expenses. Determine what you can afford in a house. Understand the real estate language, a condo, a co-op, a house. Start saving early. Start and understand all of the expenses that you're going to have to become a home buyer and to continue being a home buyer. Lonnie, any comments?
Yeah, so I'd like to spend just a couple of minutes on determine what you can afford, and of course, know the real estate language. Doing your own research is very important when you're making a purchase. size, right? And it's a lifetime investment at times, right? Maybe it's your first time purchase and maybe you plan to do something in the future, but bottom line is to do as much research as you can, ask questions, right? You're taking the first step here by, taking advantage of a great resource in My Money Workshop and Immigrant Mortgage with Veronica. So I would always say, do as much research as you can and, take note. Also, what can you afford? I think it's also important, right? Budgeting, right? When it comes to saving for yourself, pretty sure that's the first step you learn in terms of a budget, right? Track your expenses. But you have to know, and also not just say, all right, well, I know I can afford a certain type of mortgage, but also factor in other things that may come up, right? Always expect the unexpected, if you will, right? So have a cushion there, and I think that'll be important as well.
I think that's an excellent point. And what I just want to add to what Lonnie said is when you're figuring out how much you can afford, it's not just the mortgage. You're going to be paying your mortgage, you're going to be paying your taxes, you're going to be paying your utility bills. Understand exactly what the whole package of what you're going to be spending and what you can afford to spend when you go looking at a house. Or I'm sorry, when you go looking for your home buying experience. It doesn't have to be just a house. Next slide, please. Ways to save. Explore down payments and mortgage options. Veronica's going to cover those in extreme clarity. So I think we'll just touch on that quickly. Know the different types of mortgage and know what you're eligible for. Research state and local programs because that'll help you with mortgages, with down payment assistance, with closing costs. Each state has different types of things that are available to home buyers and new home buyers. Look within your state and see what you can find. That's just another part of doing your research. While you're trying to save for your down payment, set aside your tax returns. You, put aside your bonuses as they come in so you can start building up your money for your future down payment. When trying to save, take advantage of direct deposit. The bank can divide your money into different funds, put some directly into a savings account, and help you start to save toward your down payment.
And so sometimes with the doing the direct deposit and also having like an auto payment, you may have that option with certain mortgage companies. So example, like let's say Chase Bank, they may give you a discount on the mortgage rate. It may not be much, but it does make a difference over a long period of time. So things that to explore. But yeah, just take advantage of every opportunity possible. And again, it goes back to that research, see what programs are available to you.
When you're going, the second step, when you decide that it's time for you to buy your house, put together the right team. Get yourself a realtor that you feel comfortable with, that's looking out for your best interests, that can help you find your dream home, but also an agent that you feel is working for you and that it could be a go-between between you and members of your team. Your team is going to include, or should include, an attorney and a mortgage lender. The attorney should be a real estate attorney. And the reason I say that is that there's different things involved in buying a house or buying a condo or buying a co-op. And you want to get an attorney that's been through this before, that knows what to look for and understands what you're getting into as far as what the requirements are going to be for a condo or what's involved with the co-op or what your expenses are going to be for a house, or to make sure that the house is free and clear when you buy it. A mortgage lender is going to help you find the right mortgage. And Veronica is going to show you what's involved in being a mortgage lender. And when I think, after seeing Veronica's presentation before, after she goes through it, you're going to see the value of a good mortgage lender and understand why you want somebody like that on your team.
Right. And I'll actually add to that as well. So when you see the word right? So looking for the right team, just like anything else that you may do in life, you have to feel comfortable. And when it comes to having a team like this and an important decision like this, it's good to maybe interview more than one person for each step that you take, right? So every aspect of the process, making sure that you're working with the right person and they completely understand what you're looking for, and getting educated along the way as well.
And then you're the one buying the house. You're the one that's going to be going through and living to it, to make sure the team is right for you, just like Lonnie said. And with that, we want to turn this over to a Mercy College alum, our guest speaker, Veronica Ferrero. As we heard before, she's an assistant vice president for community lending from Immigrant Mortgage, and she's going to go over everything regarding a mortgage that you need to know. And I think after she's done, you have a really good understanding of why it's important to do your research and understand what's involved with the mortgage and why you want to get a mortgage lender that you can trust and that you feel comfortable with. Veronica?
Thank you very much, Lenore. And I wanted to also thank Marisol, Leah, Alexis, Stephanie, Janeda, all the team and all the people that work behind the scenes putting all this together. It's an honor for me to be speaking tonight for Mercy College and on behalf of my money workshop. So thank you very much for this opportunity. So I'm looking forward to helping everyone participating in this webinar to educate, to encourage, and to motivate. So my name is Veronica Ferrero. I've been in business for 25 years plus, and the last 10 years I've been working for community lending and helping achieve that dream for a lot of people. So hopefully this webinar will help you. I will be answering some questions during and after, and also there will be my email address that you can reach out to me if you have any questions or scenarios after this webinar. I would love to help you out. So next slide. So one of the sections that we're going to be talking tonight is the steps to purchasing a home. So again, it really doesn't matter if you're going to be buying a home in 6 months, in a year, in 3 years, or 4 years, for some people had said. It's important how to prepare for that time. It's the same way that when you're going to be buying a car, you're going to do your homework, you're going to research, and it's pretty much the same when you're purchasing a home. You're going to budget, you're going to check your credit. So the next slide is basically some of the 10 steps. There's more than 10 steps, but basically I wanted to emphasize the 10 steps to purchasing a home. So when you're getting ready, again, it doesn't matter how long of a period you have, like maybe you're renting now and you won't be ready for another year. You want to start working on your credit report, because the credit report and the scoring are going to be very important when applying for the mortgage. Again, if you remember that if you're putting less than 20% down, you're going to have what is called mortgage insurance. And your credit score, the higher the credit score, the less of mortgage insurance you're going to pay on a monthly basis. So a credit report and the scoring is very important, and it takes some time for you to get those credit scores up if you have some credit issues. So again, credit score, credit report, very important on your #1 list. Figure out how much you can afford. So that is basically important to know where you are today in reference to your job. Is your job going to change in the next few years? Are you going to be getting additional part-time job? Is anybody else going to be, getting on this mortgage? Will you have a co-signer to help you afford this mortgage? So there's a lot of I always say that I'm looking at a puzzle. You're the puzzle, and I'm putting all the little pieces together to help you out. So that's my job, and I love what I do. I'm very passionate about what I do, and my biggest satisfaction is to see you at the end of that road and the puzzle complete, that you're able to get into that dream home. Find a real estate agent. Again, you have to find your comfort level. Who is that person going to help you find that home? So again, you got to start looking at the area that you're interested and look for that real estate agent that is familiar with that area. Get pre-approved by a lender. One of the most, that should be #1. You can do a pre-approval at several stages during this journey to see exactly where you are and what you need to tweak to make it better. You don't want to be doing a lot of credit inquiries. So it's important that, once you know more or less where your credit score is and what needs to be done, then start working on that. But a pre-approval is something very important these days. A lot of sellers and realtors may not want to show you a home if you haven't been pre-approved. And a pre-approval is like a commitment. It's very different than a pre-qualification. A pre-approval is based on your income, your employment, your credit. The only thing that is missing is that you have to find a home, but it's a commitment that we've checked everything about your financing. Start looking at homes. You got to get a feel. What type of homes? Is it a co-op? Is it a condo? Is it a one-family home? Is it a mother-daughter? Do you want to be close to the train station? Are you working from home? So maybe an area doesn't matter anymore. You know, things have changed a lot through COVID, sometimes for the better. Once you've found a home and you want to make an offer, you're going to have a home inspection. So there's a difference in between an engineer report and the appraisal. So the engineer report is for your own satisfaction to see that the bones of that house are good, that the roof, that the plumbing, all those things have a lifespan, and you want to make sure if there is any specific issues that needs to be addressed immediately. The appraisal is going to be done by the bank. So I just wanted to kind of point out the difference in between a home inspection engineer report and the appraisal that is going to be done by the bank. Get insurance. Again, shop around. Sometimes if you get insurance that is tied into your auto insurance, you may be able to, get some discounts. Establish utilities. What type of utilities are you going to need? You may need, the property may be heating by gas or by oil. You need to know those things, so then you know when the time comes, more or less what kind of utilities you need to apply for. And then the day of the closing day, so that's great. You're happy, you're going to the closing day, and hopefully by then your attorney has walked you through, has explained to you what to expect, what monies to bring to the closing, and then you get your keys and you move in and you send me, thank you, I did it, we did it together. So all good things come in through these 10 steps. So next slide. I sometimes a lot of people ask me, oh, can you help me budget? I don't know what are my needs and what are my wants. So I need to be close to the train station. I would like to be close to a shopping mall. So there's a little bit of different things about the needs and wants. So I have different worksheets that I can share with you if you're interested, not only about what do I need, what are the steps, who's who at the buying, and also I do a lot of worksheets about budgeting. So I help you, kind of get to that moment. So the next slide, please. So credit report training. So again, your credit report is one of the most important things. Please look out for it. Please take care of it. It's very important that what it entails in a credit report, because a lot of people think that if you pay your credit card this month, it's going to have instant, effect on your credit scores, but that's not the case, unfortunately. It's not a perfect science, so you need to understand what entails in a credit report and how it works. What is how does a credit report work? So the next slide. So a credit report is it's amazing because it tells you a lot about yourself, where you've lived, what kind of jobs, the good and sometimes some issues that you've had in the past, how you pay your bills, do you pay them on time, how long you've had these bills, these credit cards, have you paid them off? Are you still outstanding? So sometimes I always say that January is not always the best months to run a credit report because all the holiday debt shows up in January. So, and that is not an indication of who you are, but that's what we're going to see as a lender when we run your credit, what's happening to you today. So timing is very important when you're going to have somebody run your credit. Public records. So if you've had any delinquencies, any bankruptcies, foreclosures, or unfortunately, all that stuff shows up on your credit report. So also if you applied for inquiries, if you've given your Social Security to numerous people and everybody's run your credit, all those inquiries, who's been running your inquiries is going to show up. So who uses your credit report? So believe it or not, a lot of people using your credit report and checking your credit report a lot more than they used to. So utility companies, phone companies, insurance companies, your employers sometimes, and of course, landlords are all looking at your credit report. So not only getting your credit report in a positive manner, is important now, but all these other people are going to be looking at your credit scores. So it's very important to take care not only of your credit report now, but during, all the months to come, so you keep a healthy credit score. Next slide, please. Oh, this is the pie. So yeah, this is the pie that it's so important to everybody to understand. How we look at the credit scores? What happens with those credit scores? Do we pull a number out of a hat and say, oh, well, your credit score is 700? So no, it's a little bit more complicated than that. So part of your credit score is that red zone, which is your payment history. If you've had credit scores of 700, but you missed your auto payment last month, guess what? That credit score can go down 150 points just because you missed that payment last month. So payment history, remember, 35% of the credit scores is based on your payment history. The next one is the 30% is how much you owe. So you got to remember, try and keep the amount that you owe below the 30 to 20% of what you allow to spend on that credit card. So we'll talk a little bit more about that. The lengths of credit history, also very important. If you've had a credit card that you've had for 3 or 4 years, keep that open. Don't close that, because that is going to affect your credit history. The next part of the pie is going to be your credit mix. So we want to see a credit mix that is healthy. We want to see that you have maybe student loans, auto loans, credit card debt. Some people have, your utilities that are showing up on your credit report. So there's different little ways that you can have a credit mix that is healthy. And new credit, you don't want to have a lot of new credit because that, means that now you have a lot more debt. So the credit scores is 740 and above. It's perfect. It's very good. 7 to 739 is average. Remember, the credit score, as it comes down, it will affect your mortgage insurance and probably will affect the interest rates. Next slide, please. So this is just for your information. You can get a copy of your credit report free, but sometimes you need somebody that is going to explain. It's like me trying to understand what an MRI, I have no idea what it is. It doesn't, I don't know if I'm looking backwards or upside down. So sometimes you need somebody that is going to help you with that free credit report, understanding what is showing up, what needs to be fixed, what needs to be tweaked, and where do you need improvement. So this is just some information for you to know that you are eligible to get a free credit report, but also you want to get somebody that can help you understand that credit report. Next slide, please. So if there is something that is negative on your credit report, you want to dispute and correct any errors. So many times you have a common name, somebody in the family has the same name. You want to make sure that that information has been corrected. Make sure that the collections accounts are yours. It has happened a lot that sometimes collection accounts belong to either somebody with a similar name or somebody that you have unfortunately been victim of identity theft. You want to pay your bills on time before the due date. You want to try and use more than 20 or 30% of your available credit. So don't use more than 20 or 30% of your available credit, because that's going to, again, affect. So if your limit is $1,000 and you owe $900, you basically that's going to affect your credit scores. So keep old accounts open. We said that. So it's important to keep all those old accounts open and use them. A lot of people don't use their credit. They say, oh yeah, I pay them and I don't like to use them. But the credit is based on the discipline that you have to repay debt. It's so important to know that you're paying debt on time. So not only keep open accounts, but use them. Charge a cup of coffee or anything small, pay that on a monthly basis, but it shows that you are open and active. Too many inquiries will affect you negatively. We know that. So be careful who you give your Social Security out. Don't let anybody run your credit. I never run credit without I have your written consent. I'm kind of old school. I want to make sure that you are allowing me to run your credit on your behalf, and you're not being a victim of, again, identity theft. Don't apply too much for new credit. So again, remember that you have a healthy mix. Sometimes during the holiday seasons, you get kind of lured into, oh, you know, you're going to get this credit card, you're going to get something free, and now you have another credit card and another inquiry. So just be aware of that. Don't fall in that trap. Pay your taxes and child support in full and on time. Very important. Next slide. So documents and other payments you regularly make, such as, so sometimes if you don't have the right credit scores or the credit history, there is alternative credit. There is programs that the Sunny Mae, for example, allows you to apply even if you don't have a credit score, but they will look at alternative credit. So your rent. If you're renting, you know, at a, and you have, you're renting at a condominium in, and you have a management company, that you have a history of paying that rent on time. Childcare, cell phone bills, electric bills, all these things sometimes don't show up on your credit report, but they are considered alternative credit. Even Netflix is alternative credit. So, so remember to keep a good record of your other credits. If you have insurance payments on a car, that's alternative credit. So I can always help you and give you ideas on how to create alternative credit. Next slide, please. So you can build your credit again. So if you if your goal is to buy a house in about a year or so, you want to start slowly building that credit and finding ways of alternative credit. Continue to pay down your debt is very important, and keep the proportion in between your credit use and how your limits. Again, we talked about that. So pay your taxes and child support. That's always very important. I can't stress that enough. So the next one, next slide, please. So we have common home buyer questions. I get these questions all the time. You know, a lot of people need help in what other help there is. There's a lot of different grants that help first-time home buyers. I just wanted to put that in, that it's very important that you ask the questions if you buy in the specific towns that have grants, so then you buy in that town. Suffolk County in Long Island has a specific grant for first-time home buyers. There's a Home Buyer Dream program that is starting up in March. That's another $9,500 that if you qualify. Sunny Mae is a great program, CHI. So there's numerous grants that you can layer all these grants that help you with the down payment and closing cost. And they're basically that, you know, if you keep the property for 10 years, you don't have to pay it back. So they're interest-free, and they're available for first-time home buyers. And a first-time home buyer is somebody that hasn't owned a property in the last 3 years. So that's why they usually ask for tax returns for the last 3 years. But whoever wants additional information about the different grants that are available, I would love to help you. So if we go on to the next slide, which is the questions. I hear these questions a lot, so I thought I would throw them in so then you can understand what other people ask. So what is the most important thing first-time home buyers need to know? So there is steps that you need to take before, during the application, and after. So you want to make sure that you know these steps about preparing with your credit, saving, budgeting. So there's a lot of different steps depending on where you are and your time frame that you need to take. So if you come to me and it says, oh, Veronica, I think I'm going to be buying a house in a year, but I need to start budgeting. So we're going to start working on the budgeting. How's your credit? Let's work on your credit. So the little baby steps sometimes that you have to take before you go out there and start looking for a home. So the next question is, how and where should a first-time buyer look for their first home? So again, we briefly talked about that, which was very important, is to know exactly what is important to you in reference to the size of the home, the location of the home, the affordability of the home. Because like we said before, it's not only your principal, your interest, your taxes, sometimes it's maintenance. If you're buying a co-op or a condo, you're going to have insurance, and you're going to have mortgage insurance. Sometimes that mortgage insurance, if your credit score is very low, could be sometimes almost $200 a month. So just be careful when you're talking to somebody that all these numbers are very well explained to see if you feel comfortable with that payment. Can you give a quick overview of the finance options? What about low and no down payment options? So we briefly talked about the different grants that help you. So for example, Sunny Mae has a down payment assistance, which they give you 3% up to $15,000 that you can use towards your closing cost and down payment. And you can, again, add other grants to that number. So those numbers can really add up and help you out with the down payment. And also there is programs out there. If you're buying a property that needs, for example, a new roof or new windows or new heating system, there is grants that help you with that type of property too. So again, there's a lot of exciting information out there, and there's a lot of help for first-time home buyers. Take advantage of the low interest rates because unfortunately they are slowly creeping up. So if you are able to start doing the process of buying a home, this is a very good time. The next question is, how do you come up with a down payment? So a lot of these programs require that you have 3% of your own money, and the rest of the money can come, again, from the grants and the different down payment assistance that there is available. So typically 3% of your own money, and the rest can come from the different grants. And we talked a little bit about what are the grants and how can they benefit a borrower. So it depends, the grants, on how how many people are going to be living in the property. For example, if there is other people that are going to have income that are going to be living with you, are you going to have, are you buying a two-family where there's going to be rental income? You know, all those little things can be talked about when you're looking at the type of property that you want to buy, who's going to be buying with you. And obviously, if you're going to be buying if somebody else is going to be in the mortgage with you, we want to know what kind of credit scores they have, because if you have a high credit score, but the other co-borrower has a low credit score, that may be an issue for you getting a mortgage. Although sometimes Sunny Mae has no credit scores. Where are mortgage rates now? So, you know, again, rates are, you know, some programs are depending on where your credit scores are. So again, the higher the credit score is, the better the rates you're going to have. But typically, they're in the range of 3.5. And again, depending on how much of a down payment you're putting, how much your mortgage payments are going to be. So I don't know if we want to answer some of the questions in the chat or some of the additionals. I got some questions that were sent to us prior, and I'll just maybe answer one of those questions. Looking to purchase a home in 3 to 6 months in Westchester, and would like information on grants in Westchester for first-time home buyers. So yes, Westchester has a lot of different grants that can help you. That could help you with the different grants. Sunny Mae is, it doesn't matter where you're buying, so that basically could be throughout New York. But there is some specific grants that are available specifically for Westchester. Interested in becoming a homeowner, so hopefully we can help you. And then what is the process of buying a second home? So depending on what you call a second home usually is a vacation home, or somebody that that lives you know, further out east from the city, but wants to buy an apartment to be close to work. So it has to be very defined of what is a second home. And it doesn't have to be like, you know, you're trying to be an investment property and call it a second home. And construction loans. So again, we don't do construction loans, and but there are specific banks that specialize in construction loans. Those are long terms, and then after the construction is finished, you basically have to go to an end loan. And maybe that bank can also give you that end loan.
There was another question that came through about 40-year mortgages, and if there is such a thing in the chat room.
So I've been in the industry for quite some time. I used to see 40-year mortgages. I don't know about 40-year mortgages. Typically, they're 30-year mortgages. I haven't heard of any 40-year mortgages. So I'm sorry. I don't know if there's other banks offering 40-year mortgages.
Gotcha.
Veronica, I have a question. So if a purchaser, buyer is looking to look for those grants, is that something that they would work with their mortgage officer with, or is that something they do
Right.
on their own?
So grants, you can do a little bit of research on your own to find out if there is any grant specifically for the town where you're buying or the county where you're buying. But you want to make sure. So for example, we happen to be approved to do the Home Buyer Dream Program, CHI, Sunny Mae. Those are some of the grants that we are approved. Not all lenders are approved to do these types of grants because it takes the time for you to understand what that grant entails and what are the guidelines. Each grant has different guidelines. So, my job is to make sure that you fit all three grants based on your income, based on your credit scores, based on your DTI, your debt to income ratio. So again, make sure that if you're looking for a grant, that the lender that you're dealing with is approved to offer those grants.
Veronica, we had one quick question. Is it Sunny Mae? Can you spell Sunny Mae? And Sally Mae still exist?
SONYMA.
Okay. And does Sally Mae still exist, or that's no longer available?
I'm not. I thought Sally Mae was to do with student loans, but no. Typically, it's Fannie Mae, Freddie Mac, Sunny Mae, FHA. That's another different type of loan for people that have low credit scores. But the mortgage insurance is extremely high. Be aware of that. And the mortgage insurance is for the lifetime of the loan with FHA. That their rules have changed.
Mortgage calculators. Do you recommend the one on Zillow or those reliable mortgage calculators?
So the mortgage calculator, again, and sometimes you have to know there's 3 credit scores. We talked about the 3 different credit scores. The bank usually is going to take your middle score. So if you only have 1 credit score, you may not have the accurate credit score to input into that credit calculator. We've come a long way with credit calculators. They've got very sophisticated and very reliable. But again, there's other information that goes into a calculator that mortgage calculator may not be using. So, I try and be very thorough, and I try to be worst case scenario, because sometimes, for example, real estate taxes, you may think that the real estate taxes are $8,000, and when we do the research, they ended up being $12,000. Big difference. So, you just want to be a little bit more thorough and don't rely so much on a credit calculator.
Can we have one other? I'm sorry, go ahead.
Oh, I was just going to say there were several questions that came into the chat room with a topic that we all can understand, which is student loan debt. Obviously, affording college education is a big expense. So some students, some alums are carrying some student loan debt. How would they qualify for a mortgage? And with that, is that the only debt that it is if it's in deferment?
So a lot of the student loans have been deferred or furloughed. Unfortunately, the guidelines are that even if it's furloughed or deferred, we want to make sure what your payments are going to be, because at some point, those payments are going to come due. Student loans, unfortunately, is something that is going to follow you for many, many, many years until you pay them off. They don't go away. So it's important when you are talking to a lender, you have some understanding of what those payments should be or what the payments were prior to the deferment or furlough. So I know some of the student loans are based on your income, so that also sometimes changes. But when I look at a credit report, typically if a loan is being deferred, the student loan payment is not on the credit report. So I'm going to rely on you helping me out to see exactly what would be the payments if that deferment is finished.
We had two other ones. One was, does Immigrant cover New Jersey?
Yes, we do. Yeah,
Okay.
New Jersey, Connecticut, Florida. Yeah.
And the other question was, can you change your mortgage company the same way you change insurance companies? And I think not.
No. But that leads me to one little tidbit. We service our loans. So sometimes when you're dealing with a lender, you may want to ask if they're going to be servicing the loan, because sometimes you start with ABC company and then they sell the servicing to another company. So then your loan, the servicing part is sold. And now you're going to start with another company and another company. And sometimes things get lost when the servicing is being transferred from one company to another. And now you don't know who you're talking to, or it's somebody completely different. So if possible, always try and look for a lender that it keeps the servicing of your mortgage.
So to clarify, Veronica, what you're saying is Immigrant Bank services the loans, meaning they keep it for the life of the loan.
Correct. I mean, the loan is, for example, the loan is backed by Fannie Mae or Freddie Mac or Sonny Mae, but the servicing, the every month deal is going to be done by Immigrant. So, for example, we have automatic debit. You can have the automatic debit from your account. You don't have to open an account with Immigrant. So, we have little things like that make it easy for you on a day-to-day basis.
Okay. Do you cover Pennsylvania? Was the question?
Yes, we do.
And the next question, back to servicing. When the loan is passed to a new servicer, do they change the rate? I believe, does everything go as is, or is there any change in it?
Everything goes as is. It's just that now that you're making payments to a different company, so you want to keep a good eye that transition has happened smoothly and that you have all the information for the new servicing company. Okay, so very important that now you know who's going to be your new servicing company, who's going to be your contact person. Ask all the pertinent questions so they get your mortgage payments on time, because many times I've heard that they lost a mortgage payment during that transition.
Someone else in the chat also asked about a down payment. How much of a down payment to avoid PMI? Could you help us understand what that is?
So typically, first-time home buyer, in my experience, have only put 3% down. If you want to avoid the mortgage insurance, you have to put 20% down. But there is programs that you can, again, the grant, you can use a portion of that grant to buy your MI, so then you can qualify for the mortgage better. And again, if anybody has any questions about that, I can explain that. So when you get in the grant, a portion of that grant can go to buy that MI, the upfront MI, so you don't have that monthly MI, and so you qualify better for the mortgage. Again, remember that MI sometimes is $200 if your credit scores are low and you're going for a big mortgage. So very important to keep that in mind. A lot of people forget about that monthly payment.
And Veronica, I'm curious, is there any insight you might have about debt to income ratio and how that plays into the whole process?
So yeah, again, debt to income ratio, depending on the type of mortgage that you're going, is going to be a key factor. Some of these grant companies, as Sonny Mae, for example, they require that 40% of your gross income will go to the mortgage payments. Again, principal, interest, taxes, insurance, maintenance, if applicable, if you're buying a co-op or condo, and the MI. So you want to make sure that you fit within those income ratios, okay? And they use your current income. That's a big difference. A lot of different programs use an average of the last 2 years, but Sonny Mae uses only your current income. And then 45% of your gross income, current gross income, has to go for all your mortgage payments plus any debt that is showing up on your credit report. So again, we're not going to be looking at other debt that you have that is not on your credit report. So other debt is if you have phone bills or you have additional home health insurance that you pay on your own, that is not calculated in your income ratios.
Okay, Veronica, we had another question. Is the APR rate that you get pre-approved with going to stick with you through the whole home buying process?
So the interest rate depends what you're going to be doing with the interest rate. So you have a choice to lock in the rate, typically for 60 days. So in this market where rates are going up, you may want to lock in the rate. Then again, it's important to know if 60 days will be sufficient, because not only the process of the mortgage is, you have to take that in consideration, but maybe the seller won't be ready in 60 days. Maybe it's an estate sale and the seller can't come in 60 days. So you want to factor in about locking in the rate. And when you're talking to somebody about the rate, you want to find out if there is any points involved, because a lot of people say, oh, the rate is 3%. Okay, well, but how many points it is to get that 3%? So the APR takes in consideration any points. So not everything that if you're starting to talk to a lender and you have an amazing rate, that doesn't guarantee that that rate is going to be at the time of application. So you want to talk, you want to be realistic about that, those rates. And when will you be able to lock in the rate? You want to also make sure that you've talked to your attorney to say if 60 days will be sufficient to lock in the rate. Because again, there's a lot of different factors. If the property, sometimes they need some little work to be done to the property prior to closing, is 60 days going to be enough? So there's so many different little factors. People say, oh, I can close in 30 days, but sometimes title reports are taking longer because of COVID, and a lot of these government agencies are running behind.
We had another question come in about what percentage should be set aside for closing costs.
So it depends what you're buying. So if you're buying a co-op, obviously your closing costs are going to be much lower than buying a condo or a one-family house. So a co-op is typically, let's pick an approximate number, could be anywhere in between $3,500. But if you're buying a condo, then now we have to start factoring what are going to be the real estate taxes on that condo or that one-family house. Real estate taxes, state mortgage tax are going to be a big factor when you're starting to think about closing cost. So if I have to set up an escrow account where the taxes are $12,000 a year, now you have to factor in $6,000 are just going to be for the escrow account for the real estate taxes. So homeowner insurance, will your property need flood insurance? So a lot of these numbers add up to closing costs. So it's not a perfect science where I can say, okay, set up 5%. For closing cost or $25,000 for closing costs and you'll be fine. Sometimes I want to be a little bit more, to the point so then there's no surprises. When the laws have changed dramatically, when you first start and apply for a mortgage, the lender has to give you, before you lay out any money, what is called a loan estimate, which is what used to be a good faith estimate. So the loan estimate is very accurate as much as we can get to that number. So before you lay out any money, you now have a loan estimate of what your closing costs are going to be. And then it's going to be the lender fees, the title fees, and, separate is going to be your attorney fees because we don't know what your attorney is going to charge. So there's different little factors that you need a lender to explain what all those closing costs are going to be.
Veronica, we had another one. You said the APR is locked for 60 days. Suppose that there's an issue and that it goes beyond the 60 days, or if they haven't found a house, does the bank have to run the credit again for a new approval?
Okay, so there's 3 questions in one.
Sorry.
So no, that's good. That's what happens. So the interest rate, you lock in the interest rate, and sometimes something happens and now you cannot lock in the rate. So it all depends where the rates are and how long of an extension you need. So for example, let's say that you, locked in and now suddenly you need 2 or 3 day extension. hopefully we can try and accommodate you and get that extension for free. But if something happened during the 60 days, and let's say that the title came back and there is no CO for a garage, now the seller has to go out and get a CO for the garage. The COs are taking much longer than expected and than in the past. Guess what? Now you're going to be going to prevailing rate. The credit report is good for 90 days. So sometimes, depending on what is expiring, we need to update some documentation. So bank statements, sometimes pay stubs, sometimes there is something in the contract of sale that needs to be revised. So everybody has to re-sign that revision. So again, 60 days, that's why I would say try and find out all the good, the bad, and the ugly up front. So then you know if 60 days will be sufficient time, and try and, especially when you're buying a 1 to 4 family, that all the certificate of occupancies for that property have been updated and there is no changes to that structure. So then there's no surprises.
Do we have any more questions? Anyone have more, anything else they'd like to ask Veronica? Leah, can I just confirm that the presentation that we did today, as well as access to the recording, will be available to everyone?
Yes, they will. They will be getting an email with that. Not right away, but following it shortly. We have to we have to play catch up with a lot, so it might be a little bit, but you will definitely get a recording and the contact information as well.
Yeah, around, I think it was slide 10 is all of Veronica's information in the presentation.
Yes. That's helpful as a mile marker, slide 10.
I'm trying to remember, I know it was a couple way through, but I just want everybody to know we are sending it out to you, so don't worry, you can go back and look at it later. Awesome. Lonnie, do you have some comments? Anything? I think we have 5 minutes left. Anybody?
What I would say is, again, just going back to taking advantage of resources, asking questions, making sure that you understand the process. And it's going to take time, right? So it's not going to be something that you learn overnight. But the more you ask questions and the more you learn, obviously it'll be helpful for you going forward.
The more informed you are as a buyer, the better it's going to be for you. I think Veronica has showed us exactly why you want to have a lender that knows what they're doing, whether it's for how to get to the mortgage or what's available to you as far as grants. Just someone that's experienced and knows what they're doing is going to be one of the most important people you could put on your team. Anything else?
I just wanted to thank the opportunity to talk tonight. I love what I do, and hopefully I can help somebody get to that dream come true, but make sure that you are surrounded by the right people that are going to help you every step of the way. And good luck to everybody, and thanks again to Mercy College. Thank you.
Thank you. What a wonderful presentation. We're so grateful to you, Veronica, and for My Money Workshop, because you've broken it down into a lot of the usable pieces that I think people are looking for. And we have a lot of smart alumni that want to make wise decisions when it comes to their money and their home. And this is just a great overview for everybody. So thank you so much, everyone, for what you brought to this presentation tonight.